How's it going? It's Rocky. It's week number 6 of our trading journey for the year 2023, where I exclusively trade the futures market, specifically the Dow Jones Industrial Average. And the chart, what we have here is for the week, where I am hedging with And my apologies for that. As you can tell, I'm still in the middle of recovering from a cold that I've been suffering through the past 2.5 weeks or so, but we're on the tail end of it, and hopefully we'll get out of it fine. So I was saying this is the Dow Jones Industrial Average that I am using to hedge. And what that means is with the MYM, which is the micro, I'm leaving that alone. I'm swing trading it because it helps with my psychology of how I trade. Again, as you progress in your trading journey, you gotta get to know yourself to see where your weaknesses are. And that's how I'm combating my weakness, by swing trading the MYM, and it helps me focus on ensuring that I just trade the YM, the hedge account that I'm using intraday. So what that means is in and out, not holding on to it for more than 24 hours, which was one of my weaknesses in the past. So as you can see from this chart, I'll turn on the lines here. I had a total of 1, 2, 3, 4, 5, 6, 7 trades, and out of all these 7 trades, I'm happy to say that I only had one losing trade, which was the very last trade. So for our trade analysis, I'm actually going to go through 3 of my trades. They're all 3 shorts, where 2 was a winner and the last one was a loser. And all these trades occurred today, Friday, February 10th. I found myself with a lot of time during the US market, so I was able to trade this. And my goal is to pretty much go through it just to show you what my strategy is. I am not selling a course about it, or I'm not saying it's the right or wrong way to do things either. However, if you just needed a base to help you get started, feel free to use it. And the best important part is really just developing your own strategy, right? So pick one that works for you and don't do a copy and paste. So we'll go through and analyze our first trade here. So on the left, I have the time base, on the right in the tick base chart, and on the description, if you wanted more details, all written out there. But I'm gonna show you exactly why I shorted on this trade. Basically, if you look at the time based chart, you can see that it's already starting to trend down a little bit here. But if you look at the MACD, I was expecting it to already have crossed over. I think by the time I entered this, it already did cross over. So that's when I like to short. At that point, the stochastic RSI was probably on the oversold side, which is when I like to short. And the confirmation for that is on the tick base side. So on the tick base, you already saw that crossover had occurred on the MACD, and basically we were on the oversold side. So what I did here was I shorted with one contract at 31,810, and then basically I went underwater a little bit, but I added another one at 33,820. So that gave us an average of 33,815, and we were able to cover at 780. And we can do the math in our head, but just for visual reasons, we'll just go 815 minus 780. So that was a total short of 35 points. And since we traded with 2 E-minis, where one contract for each point is $5, so with 2 contracts, each point is $10, multiply that by 10. So this trade right here actually gave us a gross profit of $350 before commissions and fees. And this is a trade that started at 8:29 a.m. and ended at 8:48 a.m. So almost a 20-minute trade that gave you $350. That I think is a pretty good trade. So that's trade number 1. Now let's move to the right for our trade number 2 for the day, and I'm gonna zoom in on that trade, and let's do it here again side by side with the time base and the tick base, just so you can see the consistency of what I look for when entering. I let the trades come to me as opposed to chasing the trade itself. So this one again, I was a bit more aggressive. On the time base, you could see it was right before a crossover, and it was more or less on the oversold side. But if you look on the right on the tick base side, which I really trust a little bit more during the US market hours, I knew that the crossover had occurred, and basically we were already in an oversold side. So I had some confidence in entering this one. You can see that I had multiple entries. I had an entry at 33,830, 33,850, and then we have two here at 33,845 and 33,850. So let's just do the math there. I was gonna try to do that in my head, but it'd be hard to really do. But basically 830 plus 850 plus, let's look at that other two that we did, 845 and 850. So that's 845 plus 850. Let's divide that by 4. So our average was 843.75. And you can see here that we were able to cover at 824. So 843.75 minus 824, that's a total of just 19.75 points. But we did trade 4 contracts. So like I mentioned, 1 contract per point is $5. So with 4 contracts, it's actually $20. So for this one, we multiply that by 20. Again, with this trade, I had a gross profit of $395 before commission and fees for a trade that started at 10:42 and ended at 10:58. So 16 minutes for $395 before commission and fees. Again, that's not bad. And this is my hedge account, and that's what I've been focusing on with my hedge account to take quality trades in and out rather quickly. So those were our 2 winners of the day, and I'll show you the last trade that was sort of a bad entry, but a lot of that was also an error on my part. So with this trade, it was actually towards the end of the power hour, and power hour occurs on the last hour of the US market being open. So I'm in the West Coast, so that happens normally during my lunch break. And what's interesting with this one was, on the time base, you could see that there was no signs for me to go short. I think this was because, I was having that overconfidence that occurs with a lot of traders sometimes, and this is dangerous. And I knew that this was dangerous on my end too. But I had seen that we were on the oversold side, and I was expecting it to cross over here on the MACD. But the one problem I made with this entry was from the previous trade, when I had closed the trade, I closed it with 4 contracts, and I forgot to change that number. And that's why I entered straight with 4 contracts, which is something I don't like to do anymore. And really, that really messed up the groove of how I normally trade. And with this trade, basically entering at 889 and covering at 904. So let's just do that. 904 minus 889. So we lost 15 points on this one. And I denote my losers by drawing this ellipse here and shading it so I can go back and evaluate where I could improve for the future. And with that 15, if you multiply that by 20, that was a loss of close to $300 on a mistake that started at 1256 and was done at 104. So I was proud of myself to cut off a trade in less than 8 minutes when I knew that it was a very, very bad trade. A bit unfortunate to give back $300, but you can't win it all. Something I've learned in life recently, you can't win all your battles. Sometimes you gotta learn when to lose. It's okay if you lose one, because in the long run, as long as it's for the good or the benefit of what you're trying to achieve, then you're fine. Losing is okay. Losing is just really part of winning. Alright, hope you enjoyed the trade analysis that I gave this week. I know it's been quite a while since I went through any of my trades. Now let's do our account statement for week number 6 to see how we did. I'm recording this on Friday, February 10th. It's about 6:41 p.m. in the Pacific Coast. And what I'm showing here is the account statement from Sunday, February 5th to today, Friday, February 10th of the year 2023. Now, just going through our description here, you can see that I did not deposit or withdraw any money for the week, so we'll just leave that be on our calculation. And our ending cash for the week here is $28,322.63, and our starting cash was $27,372.03. So happy to come out with a positive week this week. A net profit of $950.60. So, it's always nice to come out positive on a week where, I was sick, I couldn't really trade much, and the market was up and down. And just for equivalent, 40-hour week in the US, that would have been an hourly rate of $23.76. So depending on where you are in the country, $23.76 could be an hourly rate for an office job. Even some engineers or nurses get paid that much. But for high cost of living areas, you actually have fast food places that will pay you $23 an hour. So, it really is important where you live. So just sharing that, just to put some perspective on what an hourly rate is. Anyway, that's week number 6. Hopefully you enjoyed the content that I'm sharing. And if you didn't like what you saw today, give me a comment or give me another chance, and hopefully on the next one you'll like what you see. All right, have a good one.